To have you here with us today in our Dinero session, taxes edition. Taxes are coming up. I know it's the busiest time for my friends Jessica and Arthur, and they still carve some time out of their busy schedules to be here with us. So I'm so grateful and give us all these incredible tips and tricks and things that are going to make our filing process so much smoother. And also talk to us a little bit about what has changed, because certainly we all know things have changed in esta pandemia in this last year. So we want to all be prepared before we have to file those taxes. So want to introduce them both. Arthur Garcia, muchas gracias amigo por estar acá de Contavia Alliance, and Jessica Velasquez from Indiva Advisors. I'll let you guys make quick introductions, and we have hundreds of questions that our audience has sent ahead of time, and we'll also be taking live questions. So quick intros, and then let's just dive right in. Arthur, you're on mute, which I know it's like the meme of the year of 2020, and I think it'll continue into the meme of 2021. So it's very appropriate that you're on mute.
Wow, that just happened. So, un placer estar aquí con ustedes. It's just so great to be here, especially during this time. I'm the co-founder of the Contavia Alliance, which is an international alliance of independent accounting firms. And the real purpose for founding that was we felt that individuals and small businesses needed to find trusted, vetted accountants. And we have one of them here with us today, Jessica Velasquez. So just worked with accounting firms and consulted them for almost 16 years. So happy to share a little bit from that perspective with you, especially as it pertains to finding the right type of accountant and what to look for and how to make the most of your tax return.
Love it. Thank you. Thank you so much. And Arthur and I are compañeros de escuela. We took a course together. So, you know, you always ping your friends to help you out. And obviously that he was very quick to say, of course, when it meant to give this information to our comunidad. So thank you so much, Arthur. And Jessica, tell us a little bit about yourself. And again, thank you for being here. I know you're so busy, amiga. No durmiendo de aquí a que sea el 15 de abril.
Thank you so much, Beatriz and SUMA Wealth, for having me here. It's a pleasure to be here with you all. I am a CPA. I've been practicing for about 20 years now. I started when I was 5, but I've been practicing, really dedicated in the taxation area, focused here, helping businesses, individuals, really everyone in this spectrum with respect to taxes over my career. I want to take this time, a huge shout out. I am originally from Chicago, so La Vita, Little Village, shout out to my community out there, and hope you're tuning in today.
Awesome. We have a lot of fans of SUMA in Illinois, so shout out to everybody and everyone Absolutely. Who is watching us today. Okay, so let's dive right in, because there's a lot of questions from our audience, from our SUMA familia. Let's get started with a question that we got asked hundreds of times. So there's certainly a lot of expectation of what people should look for. And it is, how will unemployment affect my taxes? How will unemployment, because a lot of people, as we know, whether they were furloughed or are just collected unemployment, is there anything different that they should think about or look for as they're filing their taxes?
Yeah, I'm happy to take this one. I think that just so everyone knows, the general rule is that unemployment is taxable. It's just that in 2020, we saw a lot of it because of the pandemic and every impact that COVID had amongst our households. So just remember that you'll get a 1099-G from your local state reporting the unemployment paid to you and any taxes withheld on that income. But again, a key reminder that is taxable and is one of the forms that you should be collecting and taking to your tax preparer this year.
Wow, because yeah, it makes sense that some people might think, well, how am I going to be taxed? I'm not working. This is, quote unquote, free money. This is not the stimulus check. This is unemployment. So big difference between both, correct?
Absolutely. Great thing to point out here. It is a distinction. I think for many people, particularly in our community, we're hard workers. So we may have never received unemployment. And this truly is the first year or the first time that someone is receiving it. So just to clarify, again, it is taxable income according to the IRS. So you certainly want to have that form in hand when you go see your tax preparer this year.
Okay, great. There's a question. I'm going to be going back and forth between the questions that people sent ahead of time, and I do want to prioritize those because, you know, they're very organized Latinos who got in early with their questions, but I also want to honor the people who are here live. So I'm going to go with one of the live questions right now, and it comes from Nicole, and she's asking us, will people be penalized for contributing over $6,000 to their 401k through their employer? And if so, how much can the penalty be? It just disappeared from my screen, but I think that's what the question was.
Certainly. So what Nicole is referring to is a contribution to her 401k plan. This year, the limit is up to 6,000 that you can contribute. Anything above that is going to be taken out of your check post-tax. So that's the key difference there. So up to 6,000 can be taken out pre-tax. Anything above and beyond that will be post-tax money that you can still contribute. And that goes into contributions for 401k plan, or even things like a Roth IRA that you can contribute post-tax.
Got it. Okay, so up to 6,000, that's the limit. And then after that is after you've paid your taxes. So it's
Absolutely
not going to be the same. Okay, great. Okay, that's excellent. People wanted to know also what free resources do they have when filing their taxes on a budget? And they were asking about TurboTax or H&R block. Like, what can you recommend that might be a free resource for our community if they're on a budget, especially since we know it's been a tough year and people, you know, are trying to think, how else could I save even when it comes to preparing my taxes?
Yeah, I can start with this one. Yeah, I think there's a number of resources that you can reference. There's VITA sites, VITA, that offer free tax preparation for individuals if they qualify. So that if they're making under a certain amount of dollars per year, they can do that. And a lot of the other providers that are online, they offer free services, but that really kind of leads into the question of, when do I file myself and when do I hire a preparer? And before getting there, it's like, all right, do I qualify for free services? And if it's free, you know, who's going to be preparing them for me? And is there anything that I'm missing that, you know, from that provider doing it on your own? So there are services out there. There's a number of different options that you have, and it's just about evaluating which one is right for you.
And how could people know, right? Like, I mean, are there any tricks or tips that you can give us?
Well, you know, it's interesting because the IRS kind of has a deal with the large do-it-yourself providers that, you know, for people that qualify, you have to make them aware that there's a free option for you. And some of the large providers kind of, it was there, but you kind of had to find it on their website to see to file for free. And so it's just about taking a look. You can look up a VITA, a VITA site, to see if one's near you, to see if you qualify for free. And oftentimes the preparer will, you know, let you know that maybe you made less than a certain amount to file, and maybe you're better off going that route. So it's just always going with a trusted advisor that has your best interests in mind. But the service you get does vary between free, doing it yourself, assisted, and having a professional do it. And Jessica knows this very well. And because of professionals like her that has their CPA and master's in taxation, it's likely that they've seen it all, right? Because every tax situation is unique. You want to make sure that you're working with someone that kind of has insight and expertise to your specific situation.
I love it. And I love that, Jessica. You know, a Latina with her master's in taxation. You go, girl. I love it. And I do want to remind everyone who's joining us today that we are going to be giving away 25 one-on-one sessions, which is amazing, at the end of this session. And we'll tell you guys how you know if you're one of the lucky 25. So you'll be able to ask your particular questions to this team, because there's not one size fits all really, which is what I'm hearing you say, Arthur, because we all have different needs, right? And you might have a side hustle, but you're also employed, but you also, there's so many combinations. I have a nonprofit, I have a for-profit, I have another small side hustle with my husband. So there's so many things that not one piece of advice is gonna be perfect for everybody. So we'll be able to, hopefully, if you have a lot of questions, you'll be one of the lucky ones who gets to have that one advice with our very generous friends who are here today. Another question that we've gotten a lot, especially because we've done a lot around investing recently at SUMA, and we've been, our previous Dinero session was on fractional shares, and encouraging our community that as much as we are the cohort that spends the most, hopefully one day we're going to get to be the cohort that saves and invests the most. And that's how we're going to be starting to build this generational wealth for ourselves and for our families. So one question is, okay, I followed SUMA's advice. I've started to invest a little bit, which I have never done before. How is that going to affect my taxes? What if I invested in cryptocurrency and now it's up? Do I have to declare that? Like, I know the answer to it, but obviously I'd rather you guys give the answer to what happens as a new investor with my taxes. I've never been an investor before, and God be willing, my stock is up. What happens now?
Start us off, Arthur, and I'll give some feedback at the end.
Sure. Well, there's different types of investing. Some employers have 401k plans or IRAs, and there's pre-tax and post-tax options there. And depending on the age of the individual, it might be better to do a Roth instead of a traditional option, because if you're projected to be in a higher tax bracket later in your career, it might be better to pay those taxes now than later. And the thing to know, there's no avoiding taxes. So whether it's now or later, te toca.
Te toca.
The IRS va a tomar su
No te salvas, no te salvas.
Te toca.
Death and taxes.
So I wanted to start there. But as you're also referring to other investments, cryptocurrencies and Bitcoin specifically is a hot topic right now. So the new 1040 actually has a question this year. And the question is simple. Have you received any cryptocurrencies? Have you sold them? In which way that you receive them? It's just a yes or no question that's on that return. So as you're preparing your taxes, it's just a yes or no question. So, there's different variables there, but there was a big craze with cryptos. Bitcoin was up, and then there was also things like GameStop and the whole hedging going on. So I think all of those activities, when it comes to tax, if you made a lot of money and you sold it right away, well, there's going to be capital gains that's going to impact you. So it's typically best to hold on to those investments for greater than a year. Otherwise, you're going to be taxed at a higher capital gain rate.
So just to recap for our audience, if you have not sold it, right, you could be really up, God be willing. But if you don't sell it, you're not responsible for paying any taxes. It's only if you've sold that stock, correct?
You're absolutely correct. So the taxable transaction happens at the point of sale. Nothing really happens when you acquire it, right? You're just holding on to it. As Arthur pointed out, there is a difference if you sell it and hold it for under a year versus over a year. Under a year, you would be taxed on the difference between the amount that you purchased at and sold it at. So that difference, that gain, would be taxed at your ordinary income tax rate. If you hold it longer than a year, you get the more favorable capital gains rates that you may have heard of. And those currently for tax year 2020 range from 0%, 10%, and 20%, all depending on your income, right? So it's based on your income level for that year.
So at least ideally hold them for a year, because you'll be at a much better tax rate than if you don't. Okay, great. And also investing
Absolutely.
is not a quick game of let's buy today and sell tomorrow. You do want to hold on ideally for a little bit, because that's when it'll all balance out, right? One day you're up, the next day you're down, up, down, and then in time, you're in a great place. Okay, I'm going to take a question from our Q&A from somebody who was live with us, from Wendy. And her question is, will receiving a stimulus check after my tax, how will receiving a stimulus check after my tax return for this year? I'm assuming it says, how will it affect me or not affect me receiving a stimulus check after my return? And I also want to add to her question, because I read something the other day that it said, maybe you want to wait till you know if you're going to get a second stimulus check, and then file your taxes. We are encouraging our community to not be late. I'm like, don't be on Latino standard time, right? And we wait till the last minute, and I'm totally guilty of that. Wait till the last minute, y ahí estamos como locos trying to get our taxes in. But this go around, will you doing it too early affect you? And I kind of want to play off from Wendy's question of, what is your recommendation, Jessica? Like, how are you going to do it?
Oh, that's a good one. Great questions here. Again, I received so many questions just around, is the stimulus check taxable? So let's kind of start there. No, anything that you receive with respect to this stimulus check and checks, because there's another round coming, at least as of now, are not taxable to you. So they're not considered gross income, and thus not included in your taxable income when you file your return. So I think that's pretty clear as of now. But you bring up an excellent question, because as I just mentioned, there is 1/3 round of relief that is currently sitting with our lawmakers in DC. So tomorrow, as a matter of fact, they are looking to put a vote on the House floor for that. It would then go to the Senate. And if it's passed by both the House and the Senate, it would go to President Biden for signature. If that's enacted, which we hope it will be, the timeline right now, they're estimating around mid-March. So that's when the next and final sort of round of relief would come out. That stimulus check is based on your the last tax return on file with the IRS. They base it based on that income that's reported. And to your question, should I wait? Should I file? What do I do? The answer to that question is, did you make more money in 2020 than you did in 2019? If the answer to that question is yes, you want to wait. You want to wait until after this next round of stimulus to file your 2020 tax return. If the answer is no reason to wait. Go ahead and file your return, because it's going to be the last one on file with the IRS, showing lesser income than 19, and absolutely, and you get that process much quicker.
That's great advice, Jessica. Perfect. I think we're all taking so many notes and definitely learning so much from all of this. Okay, there's a lot of questions. As we know, as Latinos, particularly Latinas, we have a lot of side hustles. We are the queens of side hustles. So there's a lot of questions around being a freelancer. And here's one. A lot of us Latinos are freelancers. How much money do you need to make in order to file as an independent contractor? And I think that's a really good question.
Absolutely. Arthur, did you want to take that?
Yeah, so I like what you said there, Beatriz, that we're naturally side hustlers. And when do we have to file? So if you were paid more than $600, you should be provided with a 1099. And
did we lose Arthur?
We may have, but
I'm sure he'll be right back. There he is. Bienvenido. Arthur, can you hear us?
I can hear you.
Excellent.
And yeah, that just happened. So I think that I left off on saying that $600 or more from a side hustle, you're going to get a 1099.
Perfect. We missed that. So I'm glad you're repeating it. So $600 and more. So if I sell mugs on Instagram and I've made $550, that would not count until I make $600. that's when or that's different because it wasn't a side hustle to a person and that's something I'm selling. Don't you report regardless, or in both instances, is it $600?
Yeah, well, there's different cases there, because if you're an independent contractor and you get compensated $559, you've been compensated that, but you won't necessarily trigger a 1099 that you'll need to file your taxes. So there's a difference there between being an independent contractor and a side hustle, and when you're selling, whether it's mugs or something where you become almost like a sole proprietor. And so that then you get into the realm of, okay, deductions, and, do I want to look in the paints that I purchased to paint the mugs, or the any materials that are used. So there's a number of things, the space that you utilize to paint those mugs, and the puesto that you put up at the tianguis or at the flea market, right? So all those things come into play. So the answer is, it depends.
It depends. Okay. Well, listen, if hopefully, you'll be a lucky one who gets a one-on-one Dinero session. And if you have all these very particular questions, like we said, there's no one size fits all, unfortunately. But hopefully you'll know what questions to ask. Okay, great. So let's keep going. There's a couple of questions here. Somebody's so funny here. It's like, I forgot to file last year. Whoops. But there's a few about that. Like, do I really need to file? I pretty much made no money this year. Like, the pandemic got the best of me. I forgot to file. Can I just file two taxes combined? Either of you, what's the recommendation there? Once you missed it, do you just kind of let it go and keep going, or do you really have to go back? I've never missed one, so I wouldn't know what to do, but it's an interesting question. Is it like, yeah, pues ya lo que pasó, pasó? Or no, you're not going to get away with that?
I mean, from my perspective, I typically will always recommend that we're compliant. So if we missed a year, certainly file it. Let's play catch up and get that all corrected so the records are right. Even if you don't meet the minimum requirement to actually file a return, sometimes you want to file the return. I think of when you have to go get a mortgage or lending, some of the usual documents that they ask for is, guess what? A W-2, a tax return. Show me how you're, earning your wages. And so for other reasons, sometimes just besides filing the tax return, you actually want to do that, right? Besides getting something on record with the IRS.
Got it. Okay, Good. There's a lot of questions here about being self-employed. Again, we are the queens and kings of entrepreneurship, and we know we are driving that in our country. So I'm going to go to a few of these because there's a lot for self-employed. Anna's asking, what strategies or tips do you have for self-employed taxes? Another question, both my wife and I are self-employed who file jointly. Do we have to pay taxes quarterly, or can we do it once a year? I've been for many years self-employed with my husband. We have just a simple LLC and we do it yearly, but maybe there's an argument to do it quarterly. I want to learn myself. But a lot about that, a lot of like, what should we be thinking if we are self-employed? Any things that have changed from when we filed in 2019 now to 2020 that we should either take advantage of? I asked my own accountant too, like, I'm using my home as my office, for every single company that's incorporated, LLC, everything. I mean, can I not write that off? There must be new things in the law, I'm hoping, because it cost me much more in electricity and in water and in food than when I was in my office, right? So what are the things that for people who are self-employed or solopreneurs, they should think about when filing their taxes? Either of you guys, if you guys have great advice for us.
Yeah, I mean, I'd like to just kind of take this one, and really as a freelancer or solopreneur, you're allowed to take most, if not all, of the business deductions that a regular company is eligible to take. So this includes stuff like your marketing expense, your website, professional services, if you're paying for those, insurance, auto expense, your cell phone. And then Beatriz, you pointed out a great one, the home office expense, where a lot of us, again, freelancers, solopreneurs, are now using our homes as our primary of business. And so if that's the case, there's certainly expenses that you're able to take on your home office, only the business portion. And there are some requirements that the IRS wants us to meet. But if you meet all of that, again, a portion of your home interest or rent, utilities, repairs, some of those now become deductible towards your, against your income for your sole prop or your freelance gig.
But is
so
that
definitely keep those in mind.
So sorry.
Mm-hmm.
Is that only if you are incorporated, even as a sole proprietor LLC, or anybody? Because sometimes I think, it's interesting how we're all working from home, right? So certainly corporations, even if you're an employee, even if you're not self-employed, so it's clear to me, and well, I do want to ask you, can you take as many deductions if you are not incorporated than if you are? Because a lot of my friends, I say, listen, if you're incorporated, you can pretty much write off a lot, right? Not
Sure.
everything, but a lot that's right to write off. So that's one part of my question, to incorporate or not to incorporate, that is a question. But then on the employee side, I think, well, listen, even our SUMA employees, right? They're working from home. They're paying more, like I am, in electricity and in gas and because, they now hold that burden that we are not paying in a physical office. Can they, as employees, take that write-off as well, not just being an entrepreneur or incorporated as an LLC? But what's the case for both?
Yeah, great questions. So employees, unfortunately, cannot take the home deduction. They are not eligible if you have that employee status, right? You are receiving a W-2 or a paycheck from a company or a corporation. Your employer, though, is eligible to create what's called a 132 plan or 134 plan and give the employees possibly some reimbursable money towards their phone, their internet, and those kind of things that they're using at home, and the employer gets the deduction. It would be non-taxable income to the employee, and the employer gets the deduction. So that's the difference there if you are in that employee-employer sort of situation. But coming back to the question of, do I incorporate? What do I do? I'm a freelancer. Should I go ahead and create an LLC? I get that question all the time, and I think again the answer is it depends. It's not sort of a right size or the right answer for all people. Generally speaking, it is a benefit. I do like to see clients incorporate, specifically if it's no longer the side hustle, it really is the main hustle. Right. When it goes from like the side to the main hustle, I want to see, certainly our clients kind of legitimize it. And really, they do too. It gives them legitimacy. We now kind of see more websites, more marketing, and it brings them more clients, quite frankly. Right. It legitimizes their business.
And we were talking the other day, Arthur and Jessica, about it's not just the deductions, right? Like I am also definitely in favor of incorporating, and besides the write-offs, which have tremendous benefit, I think, if that becomes your main hustle, as you point out, there's a lot of protections that you get from being incorporated. And I know you both have stories from clients who were not incorporated, and that has terrible consequences on them. And if something goes wrong, right, they go, a lawsuit, something goes to you personally versus, potentially to at least an LLC that has some, that's why it's like limited liability, right? Can you explain a little bit of both to whoever is watching us, so they can just think through what some people say, I don't want to pay $800 a year. And you're like, first of all, I'm sure you'll have more than, if it's your main side, if your main hustle, your main job, potentially you're going to get much more than that in the write-offs that are legit for you to take, but also those protections that could really cripple you.
Yeah, I think I could start off, Jessica, and I think there's a number of things, as you mentioned. I really like how you put it there, Beatriz, is when it becomes no longer a side hustle, and you begin to legitimize that. There are a number of things. One of the things is going from using your social security or ITIN number to identify that hustle to a tax ID number. So
Right.
think of the insurance policy, think of everywhere it asks you to register your business, you're putting your social, your personal identification, your ITIN number versus the number that represents the corporation or LLC. So that's one of like the clear differentiators is that ID. But as it comes to liability as well, same thing. If you're running a home owner's insurance policy versus a business policy, and if someone gets hurt in doing business with you, they're going to go after you, Arthur Garcia, or Arthur Garcia Incorporated, right? So two different entities, and that's essentially what happens when you're incorporated. It's an entity that's separate from you, the individual, for a number of different reasons. I'm sure, Jessica, you've seen this. There's some tough stories, some sad stories that happen, and I think Jessica, you had a good one.
Yeah, I see this all the time in the sense that there are some sole prop jobs or gigs that I almost immediately will tell them to incorporate. Particularly, let's think of like the jardineros, right? People that are working in the lawn service or with heavy equipment where something can go wrong. I also think of people that are doing food service, right? If someone gets sick, if something happens, they're going to come against you. So anything where there's a potential for liability, I almost immediately want you to incorporate. I certainly tell them to talk to an attorney if it's more complex, but typically there's those types of gigs that have liability where it's just beneficial. I have a particular example where there was, someone providing lawn care services, and there was an accident on one of the jobs. They were sued. They weren't incorporated. And so the lawsuit was against them personally. And really the only asset they had of value was their home. So there, in that particular situation, there was huge concern that the only asset, like everything they'd been working for, was on the line now. And so again, particularly in those kind of jobs where there is a potential for a liability for a customer to come back, for an accident to happen, I highly do recommend the incorporation or the LLC to give you some protection.
Yeah, the $800 that you have to pay a year seem like nothing compared to losing your home or everything that you've been working so hard for your family. I agree, and those stories are so heartbreaking. I'm going to come back now to the live Q&A. I have so many questions, as we do here in my cheat sheet of hundreds of them, but we'll try to get to as many as we possibly can. There's one regarding stimulus check. It says, can the government hold my stimulus check if I owe taxes? And take what I owe from there. I would know how to answer that.
Yeah, that's a great question. I actually haven't seen it happen yet, where they are holding for back taxes due. But I want to come back and give an official answer to that question later in the chat.
Got it. Oh.
But Beatriz, I think also what's important with that question is differentiating between stimulus and a refund. Whereas a refund, if you owe child support, if you owe back taxes, it's going to be net of all those deductions. So for people that haven't received a stimulus before, but have been told by their tax preparer that, they're getting, let's say, $2,000 in their refund, and then at the end of the day, they get $1,500. Well, what happens to those $500? Do they blame the tax preparer? Oh, actually, I forgot. I had this tax lien or this tax liability that was due, and that's why it was deducted from the refund. So just want to differentiate between two.
That's a great point. So for refunds, for sure, be prepared that absolutely that is going to happen. With a stimulus, Jessica hasn't seen it yet, so you might be okay, but God knows what can happen there. Okay, great. There's a question. I mean, there's so many questions. There's one that continues on this same thread, so I'm gonna stick with this so we're not all over the place. And it's about stimulus checks also. It says, how would the stimulus check, is from Vanessa Mendoza. Thanks, Vanessa, for being here. How would the stimulus check impact my taxes state-wise? Is it different per states or? Any answer to that?
Yeah, so as I had mentioned earlier, it's not considered gross income for federal purpose, so it shows up nowhere on the federal return. And as of yet, I don't believe, again, that it would be considered gross income for state purposes. There's not been any deviation there. So really no impact for you. It truly is free money. That's the intention. It's to help stimulate the economy during this COVID pandemic.
Okay, this is a perfect segue for the next question. This is from Veronica Lara. And she's like, if stimulus checks are not taxable, why is it that when I click the button that I received a stimulus check on my tax software, why do I owe instead of get a refund?
That's a great question, and it might be time to visit a professional if you're doing it at home.
Okay.
I couldn't
Veronica,
really say.
I'm going to light a candle that you're one of the 25 that gets a free advice, so we can sort this out of why are you owing instead of getting this refund. Okay, great. I'll go back to I'm trying to be like back and forth to honor people who were very early with their questions. Let's go back. I mean, obviously, deductions and getting refunds is on everyone's minds. And I know we've talked a little bit about what are the tax deductions that somebody can put in as a freelancer. And I know the answer to this, but maybe you have a better idea. I guess it depends on what kind of freelancer you are, but I don't know if there are certain things that these deductions cover every single freelancer. I know, for example, in my previous life, when I used to be a TV producer, I could pretty much write off everything if it was real, but sometimes we had crazy stuff in productions. We had to hire a helicopter. We had to, people are like, what is this charge for a helicopter? I'm like, we needed it for the shoot. So that would never fly if, maybe you're in the food industry as a caterer, right? Renting a helicopter, although you never know to transfer the food. But I guess it depends per industry, but are there any sort of general ones that apply to any freelancer that you would recommend that people don't miss? Or are there I'm going to add to this one, are there new things, because I press my own CPA with this and she's awesome, who Arthur also knows, that I'm just like, Nuri, you got to tell me what are the new ones for this year, because there must be some new ones. And I learned that, for example, takeout food, as they're trying to help small businesses, now instead of only being 10%, and I am an LLC, now you could write off 100% for a certain amount of time. What are the new things that have changed, and what are things that freelancers should be looking out for in general? Because I would assume this food one, that is a new one, could apply to any industry, correct?
Yeah, absolutely. I think that you're speaking of the overall meals and entertainment deduction. We saw some changes with tax reform come through in 2018 under the Trump administration. And so you're speaking directly to expenses related to meals and entertainment, which are now, as Beatrice mentioned, 100% deductible. There was a limitation prior to that. But I would say, generally speaking, so for all freelancers, anyone that has a side hustle, a main hustle, incorporated or any version of those, the general rule is that you're really able to deduct any expense related to running your business. So that includes auto, right? Advertising, your office space, office supplies, travel, the helicopter in your example, right? That's necessary to run that production. Any professional service, services that you might get. I think where people kind of miss the boat is not, hey, what's deductible? It's actually just tracking it. I find that most clients, what they do is they wait until the end of the year, and now we're like, okay, now I want to file the taxes for my business, for the side hustle. What do I do? What do I take? And then the question I ask them is, how did you track it? What do you use? Is it a credit card? Is it a bank account? How do you keep it all together? And so I almost want to reframe the question. It's not really what's tax deductible. Generally speaking, most things will be tax deductible. It's really how good record keeping do you have? Are you keeping track of all of that, so that when you do come to the tax return preparer or professional at the end of the year, you have all of your books and records. You're maximizing all of the deductions necessary throughout the year, where I think what happens in some cases, we wait until the end, we miss things, we forget things. I put it on this other card, or I paid cash for this and I don't know where the receipt is, and things of that nature. We actually miss more deductions that way than just, I think, like looking at what the rule changes are. So I think that's very general advice, but I see that time and time and time again, without fail, particularly for our freelancers, because they may not have a books and records, or they're not doing true accounting. It is the side hustle, but the accounting or the record keeping is just as important to maximize all of the deductions that are available to you.
Got it.
Yeah.
Okay. Yeah, go ahead, Arthur.
Yeah, I just wanted to add to that is solid point there is there's no deductions with no documentation, right? So
Right.
the accountant is essentially going to be putting their business on the line for vouching for you, and they're not going to want to do that. So they're going to need receipts, documentation. So just, we just started a new year in January. So start, whether it's a folder, if you can digitize them, even better, because your bank statement will have the transactions, but you also want to have the source documentation to go along with those. And guess what? If you keep track of all your documents throughout the year, you make your tax preparer, your accountant's life easier, and it's going to make their job in processing that data faster. Otherwise, and this will kind of go into pricing, if you take all of your bag of receipts, tu bolsita, tu caja de zapatos lleno de recibos,
Tu
like
cochinito.
that, yeah, the cochinito, all of that to your accountant, guess what? They're gonna charge you for that data processing, right? They have to pay somebody an hourly wage to key in those things into a spreadsheet. So it's just better to have everything. And then what you're paying for is real value. And that's where the expertise and the experience of your tax professional and your accountant come in, is when you're paying them for that expertise, not to key in papelitos and crumble them and key them into a spreadsheet. So that's a key differentiator on how to get the most out of the relationship with your accountant.
Right. No, that's a great point. And I guess, for me, it helps me. What helps me, I'll give my own, is to have a separate credit card and be very, diligent. Although I've always had an LLC, even as a solopreneur, when I arrived here many years from Mexico. And it had to be tied to my social, to your point, Arthur, because I didn't have credit in this country. So although it said, Adela Producciones, it was tied to my social security. So Amex gave me one tied to my social, but instead of having my name, Beatriz Acevedo, it had the name of my, quote unquote company. And then I stayed very, very diligent as far as like, okay, do I pay with this card or this card, right? Is this like really something, am I working and I ate, during the shoot or whatever it was, I'm going to put it on the corporate one, even if it was tied to my own social, like I said. But then that it made it very easy. And now in this day and age where you could match those receipts, whether it's Amex or Visa or MasterCard, whatever it is that you want to use, it's very easy for you to keep track. And then it'll give you a report even at the end of the year of how much you spent per category. So then that's an easy file for you to give to your, hopefully, accountant, or if you're doing it on your own, you know what to write up. So for me, I know that's been very, very helpful to do it through a credit card, because then that way it's all organized. By all means, pay your credit card every month. That's why I try to do one that I have to pay every month, not one that's just gonna, linger there with interest rate. But there may be other tricks, like to your point of how people can get organized, even if they decide. I think for me, tracking cash and tracking recibitos and all that was a pain in the neck, because I remember having to glue each one in these like pages and then add them up and send them to the account. That was just a nightmare. So the easiest that you can make your life, I think, in this day and age of technology, I think that's the best thing. But I do want to go back to deductions. I'm clear, Jessica and Arthur, that being organized is great, but what are the things that people don't know that could be write-offable, right? Like I would have never known on the meals and entertainment, right? I just knew that was 10%, but now I'm thinking, well, maybe I don't feel that guilty ordering in, especially from a Latino-owned restaurant, hopefully in your community, because I know it's going to be 100% write-off instead of a 10% write-off, right? What are the other things? Like, is education one? Sometimes I'm like, oh, maybe I start another executive program, but oh gosh, it's $15,000. Like, do I want to stomach that? But I'm like, is that 100%? Is that 20%? Is that 5%? Where can we go, all of us? Because I have this question all the time, to see what changes and what are the things where people, depending on their industry or what they do, And what is the percentage? Because sometimes it's write-offable, but it's 5%, right? So I used to tell my accountant, not this accountant, one that I used to have many years ago, and I was like, what do you mean I owe money? Like, I gave you so much more than I made. And he never really explained to me that it's like, oh, meals and entertainment only cost 10%. So I was psyched, like taking client dinner. And then at the end, it wasn't 100%, right? So where can we go? Because I know you're not going to have the answer for every single industry right now or a list, but is there a place where you go and check out what's deductible and what are the percentages also? Because that's important.
I would say the primary sort of source place to go with reliable information all the time is irs.gov. So the same people that we file our taxes with and submit to, they publish great, easy to understand, really simple kind of terms, updates on what's happening in tax law changes. So there's a really just great resource. Places like SUMA Wealth is also another great resource. Visiting webinars like this and again, participating in platforms like this that offer education and information that's truthful is a great source for you all to have. When you visit your tax return preparer or professional, yes, you should be talking about the prior year and what's happening in the return that you're going to file. But you should also be talking about what's happening in this year. I want to know what's happening now. And so to your point, every year the law is changing. And quite frankly, the last 3 years, we've seen so much change in tax law. We typically don't get major reform. Maybe we'll see it once a decade. Well, we've had consistent law changes over the last 3 years due to our prior administration and now with COVID. And so because things are moving quickly, you want to actually get in front of your professional ASAP. Tell me what it is. Tell me what I need to know for this year. I do want to add maybe a few tidbits of things that people should be aware of. So with the Trump reform or 2018 tax reform, there is a new deduction that's available for sole proprietors and self-employed individuals called the qualified business deduction or the QBI deduction. And so if you have a net profit from your business that you earned throughout the year, you're eligible up to 20% of that net profit as a deduction. And that is certainly new. That's effective January 1st, 2018 going forward, where I think, again, in our community, we maybe don't want to, we don't want a tax bill, right? No one wants a tax bill. No one wants to pay a lot of taxes, but there are these really great deductions now and tools that are available to lower your tax burden. I always say a higher tax bill means that you're making more money. That's generally a good thing. We want to make more money. We want our businesses to be successful. And a counterbalance of that is just paying a little more tax. But again, things like the QBI is relevant if you're in a business and you're you're profitable and you're making money. Definitely talk to your tax professional about that and make sure that you're getting that deduction. I think, again, generally speaking, for the most part, there's also acceleration on equipment purchases. So if you're buying massive equipment for your business that costs a lot of money, there's an opportunity to either expense all or most of that in the current year. So that would have a huge benefit on companies where that's applicable. So there are some benefits, but I think, again, given all of the changes over the last 3 years, it's better just to kind of go and have a conversation with that tax preparer or professional that you're working with. Right.
Is there an average cost just for our community watching, because people might think like, is that going to be super expensive? Like, what is the cost? Because I do agree with you. I am a total planner, right? So I started pushing mine months ago, like, okay, what are we doing? Can you take a look at where I'm at now? And that's 4 or 5 months before the year ends, because I want to know where do I stand? What are things that I could still do, And, but listen, I understand. I'm totally in a position of privilege to have an accountant, to be able to pay my accountant and to plan for my taxes. somebody who's like, I've limited resources, is it a good idea? I always think it's a good idea because I think, knowledge is power, and you knowing moving forward, what are things that you could be doing better? What are the benefits that you can receive? Because that's not our business. And you don't know, you need a professional. But is there a range, Jessica, Arthur, on like, and I'm sure there's very different ranges, but what could people expect if they go to a, hour, half an hour consultation with a professional? Is there such thing as an average or not really?
I think to your point, it's a little hard. Everyone's going to have their price points. Specifically for me, my hourly rate is $350. So a half hour costs you $175.
Right.
$350. The way I try to communicate this, and what I try to tell my clients, is it's not really an expense, it's an investment.
Right.
So I think we have to change a little bit how we view that. It's
Right.
an investment in you, it's an investment in your business, it's an investment to really understand and have a professional kind of guide you in your pathway and work with you to accomplish your goals,
Right.
your financial goals. And so I hope that the takeaway here is really that shift in mindset. I hope that we stop seeing these things as expenses, because quite frankly, we spend way more than that at the Starbucks and at the taqueria and all of these other places. And that's okay. But when we want to pay the professional, we're like,
right.
I don't know.
Well, and if you are going to pay a professional, I'm definitely going to say it here. Like, we got to do business with each other as familia, like we really do. They're incredible people. And as I'm sure you already know, from Arthur to Jessica to so many other accomplished Latinos in our community that can give you brilliant advice. And for me we keep the money amongst ourselves. And I think that's always, the right thing to do. But also, to your point, it is an investment. Can you imagine the people who lost their home because they didn't make the investment on the $150 for somebody to say, incorporate yourself because you could be liable? Like, this is a very risky business that you're, pierdes lo más por lo menos, right? Like my abuelita used to say. And you do want to be mindful of that. But isn't accounting also services write-offable as well?
Absolutely.
I always think, well, que se lo pague al gobierno, a que se lo pague una Latina como la Jessica o como mi amiga Nuri. I'd rather do that, right? Or Arthur. So that's also something to consider. That is a write-offable expense, right? So it's an investment and an expense at the same time. So I think that's a good way for us to think about it, where, that expensive bag or tennis shoes or watch or whatever it is that our community loves to buy. Latinas, we buy a lot of makeup as well. That's not write-offable unless you're a makeup artist, of course. But so
course.
this is so that's a good way to think about it. Any thoughts, Arthur?
Yeah, I would say just on the pricing thing. I mean, we have to get away from, trying to find the best deal on a tax return, because it's just not worth it at the end of the day. I mean, I live here in San Francisco, so if you're like, all right, I'm gonna just go on La Misión and find the best tax preparer that charges me this. La vecina, or that haggling over a tax preparation fee or going from one to another, it's just not worth it. You want to make sure you get the most out of it, and you want someone that's proactive. So we touched on a couple of different things. Someone that's just going to do a transaction with you and say, all right, here's my price and see you next year. Or someone that's going to say, you know what, you got a big refund this year, so let's take a look at maybe adjusting your W-4. So talk to your employer. You have the right to adjust your W-4 withholdings any point throughout the year. It's not just once a quarter, once a month. You could do it from pay period to pay period. And I remember when I was growing up and I didn't understand how to fill that out, my parents were, oh, ponle un cero ahí, single zero. And I was like, all right, well, is that good for me? Is it bad? And again, the tax return has so much more impact than just a transaction and a refund. It affects how you prove, if si quieres comprar casa, if you want to buy a house, if your children are applying for a FAFSA, you want to file and have those. So there are just so many implications that it's not worth trying to find the cheapest tax return fee.
Right, right. No, I mean, the takeaway today for everyone who's watching is knowledge is power, right? Knowledge is power. So being informed, whether it is by having, one-on-one consultations with a professional, there's a lot online. We are all trying to, get as much as information as we can to our community. So we will continue to do these Dinero sessions at least once a month to keep everybody informed. But there is a lot of information. If you can afford and you can invest, and remember, it's tax write-offable, one-on-one consultations, the better yet, because there's not one size fits all. Talking about students, that now that you mentioned it, Arthur, there's a question here. We have so many questions and we are almost out of time, but don't worry. We are going to get to all of your questions. What we're going to do is, well, we have your names. Hopefully we have your emails because you registered for the session. And that's why we always want to be proactive, asking you for your email or your cell phone number, because we're happy to text you back. We're happy to WhatsApp you back. We are Latinos after all. Or just DM you, whatever it is, with the answer to your particular question. So I know I'm putting you guys on the spot, Jessica and Arthur, but I am going to be sending you this Excel spreadsheet because there's tons of questions that we have here from our community, and I do want to honor us responding to their very particular questions. So we'll take a few more hours that we're not going to have time here, unfortunately, but we will get to an answer to your question. So everybody who's put questions on the Q&A, everybody who sent their questions, we are going to get to you. But I do want to get, so for anybody thinking, oh no, this lady speaks too much and we only have 4 minutes, we'll get to your answers eventually, even if it's not in this particular moment, but in the next few days. There's a question here about students. Oh, I think I just missed it. It was something, oh, here it is. This is coming from Bonnie Garcia. How do full-time students who are not dependents file or claim deductions?
So full-time students, you're not a dependent on your parents' tax return. Kind of goes back to the question, are you required to file? Do you even meet that standard of filing a tax return? If you didn't hit the income limits for 2020, then you really don't have necessarily a filing requirement, but you may want to file because you may have an education credit available to you, right? So again, this is in the scenario where you're not being claimed as a dependent on your parents or someone else's tax return. So for that reason, you may want to file and see if you're eligible for one of these education credits offered in 2020, like the American Opportunity Credit, as well as the Lifetime Learning Credit. And so again, we'd want to check for, if you're able to take those credits, even with your income levels.
Okay. That's great to know. There are a lot of questions regarding, because we know just our community, we're just naturally born entrepreneurs. So there's a lot of questions regarding LLC versus S corps versus hybrids. I think what the best use of our time, because we only have a few minutes for our goodbyes, is I'm going to promise every entrepreneur that is here, every solopreneur that is here, that we will do a specific session that is going to be for that, because that is a very different conversation. So we will devote a full hour and more if needed to solopreneurs and entrepreneurs. And we are planning one very, very shortly. So we will get to those questions. Regardless, before the question, you don't need to wait months for a Dinero session to get this question answered. Again, we will, and hopefully Arthur and Jessica will say yes, that they will help us in answering the questions that we didn't get to in this hour. And we will get back with answers to everyone who registered for this Dinero session, because we are 2 minutes out of time. And I do want to ask both Arthur and Jessica, like the biggest takeaway they can give everybody who's watching today when it comes to their taxes. Like, what's the one big piece of advice they haven't given us yet, but they want to plant that seed for you guys before we say goodbye, as our parting words, as their parting words?
Yeah, I guess as my parting words is have a plan. When you go to get your taxes done, don't treat it like a transaction. You need your documentation, and the questions that you're going to ask your tax accountant, right? What can I do better? What did I do wrong? Like, getting a big tax refund is sometimes promoted as like a prize, like come in and get the most that you can qualify for, up to $6,000 this year. You have to understand that you've given the government a tax-free interest-free loan. And what could you have done with that? Maybe you could have bought Bitcoin. Maybe you could have been saving for that casita, right? So there's different things you could have done with that money instead of just treating it as like a savings account for you, because it's not necessarily a good thing to get a big refund. I know everybody's situation is different, right? Some people really need that money, but maybe you don't need to buy that furniture. Maybe you can save that for the house, right? So have a plan and realize how your refund impacts you and what you can do. So just be prepared for that meeting with your tax professional.
Okay, excellent. Jessica.
Yeah, I would say the biggest takeaway, hopefully for our audience, is, information is power. The more you have of it, the more you have, particularly in this arena, the better you are to drive your own business and grow it and grow your financial wealth, and all of the things that again SUMA Wealth is bringing to us in this Dinero session, which is really important. Our community doesn't do enough of it. I think we're scared of it in some cases. I see that with my clients. They're nervous. The IRS makes us nervous. Anything kind of related to the government, there's some issues there. Let's explore that. Don't be afraid of it. Deal with it head on. Ask the tough questions, and don't go by lo que te dijo la comadre, la vecina, el amigo. Talk to the professionals. They're the ones with the answers. Unless the vecina or the amigo is a CPA. But again, come and talk to the professionals. Find one that works for you, where you have a good relationship with, and you can come prepared, as Arthur mentioned, with that plan, and really see what that brings you.
That's great. Well, thank you both. I know this is such a busy season for you, so can't thank you enough for all the preparation for this session. And I know I'm going to ask you for a few more hours of your time in helping us answer every single question that we have on the Q&A. But I really, really appreciate you guys showing up for our community. I mean, obviously, we're all familia here. We all want the best for our community. We all had to learn the hard way. These are not conversations that we grew up with. To Arthur's point, our parents did say, like, ponle cero aquí, mijito, ya. And that probably, is well intended, but not the best strategy at times for us. So can't thank you guys enough. And it's such a sense of pride to see two incredible Latinos that are so smart and that are supporting our community. So thank you for that. I want to remind everybody who's still on that, talking about Bitcoin and talking about information is power, our next Dinero session is going to be on crypto. Primarily not because, yes, we want a lot of Latino millionaires making millions out of crypto, but you might not, right? We want you to have the information of what is real, what is a risk, how do you go in with your eyes wide open. I recently learned of this Instagram page, and I don't have the name because if I did, I would say it here to beware of it. But somebody being offering that it was absolutely risk-free to buy crypto, and giving these crazy returns all through WhatsApp, targeting our community worse than the shark loans. Now they're targeting through crypto because people hear crypto, that's going to make me a millionaire. And they were asking for 20%, okay, of the money you're going to invest. They're going to take 20% and then 20% of the money that you make. So primarily, they're going to rip you off of 40% of your money, guaranteeing you that you're making this money, which nobody could make that claim because this is more volatile than the stock market. So we are going to have a full hour on this. Before we have this session, if you are targeted by any of these Instagram pages, anything on your WhatsApp, que mira que me lo mandó mi mamá, que tu tía me dijo que voy a ganar millones, be really, really careful. And please know that we're here to support. DM us, send us a note. We're happy to check with our experts and get back to you. But I'm really concerned about our community being ripped off at this moment with all the noise on like how incredible crypto is. Now, I'm not saying it's not. I personally, along with my husband, are heavy investors in cryptocurrency. So I'm not saying not to do it. I'm saying you have to be careful on how you're doing. A commission rate that is ongoing is 0.25%. So somebody who tells you they're going to take off 20% of the top and 20% of what you make clearly is a massive ripoff. So just wanted to leave you guys out with that because it's something that's been on my mind and I've just been mortified since I heard about it. We will continue to inform you always so you are prepared, so you continue to have this information that we say it's power, because we want you to win. We are here to see our community succeed and to build well juntos. So thank you so much for everybody who stayed. Thank you again to Arthur and Jessica. And I wish the best of luck to our 25 lucky winners who are going to be able to have this one-on-one session. I think we're going to be contacting you directly in the next day or so. And it'll be people who participated in the session. So good luck to everybody and hope to see you guys soon. And thank you so much for your support of SUMA Wealth. Continue to follow our social feeds and our website. We continue to have information every single day to make you smarter and wealthier. Thank you y buenas noches.